All right. Good evening, guys. Sorry, good morning from here. So today I am going to redo the video on USDCHF, and also uh, we like to add some other pairs to it. And the pairs I'm going to add to it is uploaded on Facebook, and that is EURCHF. And also we talk about the current one I did this morning, and that is EURGBP. And also I want to make a correction on DXY. And remember the last video I uploaded, you say you guys should share your thoughts on DXY, and I make the mistake right here on the algorithm day rate. So yeah, I am not always perfect in prediction. Like, I'm not 100% perfect in prediction. Sometimes I could make mistakes, so I am a victim of mistakes also. So the wrong analysis was done here, but also at the same time I saw a DXY analysis I did, which was a sell entry, which was a sell prediction using the algorithm day range. But it happens to be that price that I was having two thoughts about that, so they predicted it well. But then we share the analysis with you guys right now. So it was seen on the month, probably this month, and this is where we have it right here. Alright, so I predicted the sell right here. You can actually check the date right here. That was the July 5th 2023, and you can actually check the time right here, 14:43. And also we had the second one, which was a buy setup, what was done at the same time. But look at the time right here, 2:57. So this is 2:43 and this is 2:57. So the one I posted was a buy setup, and then I noticed that I was wrong. So we quickly do that right now. So to redo the video on USDCHF, because of the previous one doesn't have an audio in some part. So yeah, now remember I said the first thing that we have to do is that you run up to your monthly time frame. And what I can see on the monthly time frame when you zoom out is that we can see that USDCHF is on a strong bearish market. So let me move to FXM. I think we will see more charts right there, and you can actually see it right here that we are on a very strong bearish market. There is no bullish market on USDCHF, so possibly I'll be looking for for sell entry. So number one is that when you zoom out, it is a strong bearish market, and also you can actually see that the overall market right here is actually a ranging market right here. So I'm taking off one with the drawings right here. And what did we see right here? First of all, bearish, and now we are in the range market. So what we see is that we have an area of resistance. I've explained this in the previous video, and I'm not deleting that one, even though some audio is not presented there. So we have the area of resistance and we have area of support. So we already know where price is to be drawn to, right? So the interesting part I saw was that I was looking for sell entry also, and that was on the weekly time frame. Now, what was I see on the weekly time frame? What I actually see on the weekly time frame was that I saw a bearish market. We have a lower low, we have a lower high right there, and the market traded lower again, giving us a new lower low, and traded backwards to give us a new lower high right there. Now, immediately I noticed this lower high. I was actually looking for sales. So let me go back to Rwanda because I saw something here that I don't like. Alright, so this is Rwanda right here, and we can see that when he gave us a new high, lower high, I was actually looking for sales. And also, if you use the Fibonacci to mark a structure, you mark this high, the swing high, and the swing low right there, you can actually see that what you traded backward into is the 50% price level and Fibonacci level. And I've explained that to you guys using one video I posted on YouTube talking about the Fibonacci confluence with the algorithm theory range. So use Fibonacci in areas where you're having structural swing highs and lows. Those are areas where you use your Fibonacci. So otherwise, you're looking for structural breaks, and you should actually follow that with the overall trend. So running down to the daily time frame, what we can see is that on the daily time frame I saw another structure right here, and right here we have a swing low, we have a swing high right there. So even also use Fibonacci to mark the low, the high, and the low. You can actually see what it traded into. That is actually at 0.618 Fibonacci level, and in confluence with that we have an area of supply printed for us right here. So price hunted the high, taking out inducement, trading to the area of supply, and we are now giving a confirmation entry on the daily time frame, which has right here a structural break. So we have it that has a break structure on the daily time frame, and we'll quickly run down to the lower time frame to look for entries, right? So what I saw right here on the 4-hour is very clean and wonderful for us right there. And remember, I said the take profits will be here. So now on the 4-hour time frame, I can actually see the structure shifted to bullish and went to bearish. And also I always tell those on the mentorship that we don't mark this style of structure like areas where you're looking for entries, because this right here is a choppy market, this right here is a compressed liquidity. So when price was trading higher, it was trading in compressed liquidity, and immediately hunted that high, trading to the supply zone on the weekly time frame. We finally see it trade higher and lower, and it started to shift. First of all, it violated an area of demand right here, because you actually see you're printing your high, low, tap into a demand, then the demand failed, and right here this is where we have it. So we now see the structural break, right? Price to trace backwards, and how do you trace backwards? We had the mitigation of this area of supply, and it traded lower, right? So we trade lower, giving us imbalances, and the white candle right there is what I consider as the other block, right? But then my entry I had was actually on the 1-hour time frame. So if you go over to my Facebook page where I posted it, you can actually see the entry right there on EURCHF, the 1-hour time frame. And I was actually taking out some break even, so I didn't stay on the trade for long to swing it. So I had a limit on the 1-hour time frame after the analysis is done, and right here we have the 1-hour order block. Now this 1-hour order block is a value clean entry because it traded backwards to do what? To clear a fair value gap. So a balanced gap right there, and it's a confluence that you're not having any imbalance above in which price we have to trade into. So it's already cleared imbalance, and also for those that are seeing this as a structure like high, low, high, price actually traded lower and violated the area of demand. So this area of supply is now has a demand to supply flip. So violation of demand, and the reason of that is that the supply zone. So it is like saying another block is valid if it violates an opposing other block, and that's what we experience right here. So I have my entry right here, price sold off, we traced backwards, hunted that high in which I sold off, and finally sold off. Now the reason it did that was that if it happens to be you refined the other block, if I refine the other block, you actually see that it traded into the lower time frame area of supply right here, and actually the area where I marked fair value gap. So we have the area of supply right here, and that is where price traded into. We have the sniper entry, and then we finally see it traded lower. So that is how USDCHF played out, and that is a wonderful one. I love to swing the trades, I love to swing trades, and I love how prices is going, and I'm also being rewarded. So that is the sweet part of being a swing trader. Now the second pair we're talking about is EURCHF, and right here we're going to EURCHF. Let's check the FXCM broker because it always prints for us past charts. Alright, so the first thing first, I always advise when you open your chart, before you execute trades, before you do analysis, you start off with your higher time frame, which is what? Your monthly time frame. So we are now looking at we go up to the monthly time frame. Sorry, my recorder was having was malfunctioning before. So yeah, that's by the way. Now this is EURCHF on the monthly time frame, and when you zoom out, you can actually see that the overall market on EURCHF is a bearish market. We are not actually going on a bullish market right now. So now we are looking for sales, right? So looking at the current price level, that's not going in the range here also. So let's start off with marking of our structure. right? So we have a recent low and a recent high, and then it traded lower to give us a lower high, sorry, a lower low. Then we now see it finally trade off to give us a lower high. And when I see this, I'm now looking for sell entry, sell confirmation. Also, when you use the Fibonacci to mark out, you can actually see where it traded into. It traded at the 0.618 Fibonacci level, and also the body of the candle be respecting the 50% price level. So when you use the Fibonacci level, always use it to confluence with the trend after a break of structure. Alright, so it traded backwards, and we say it traded into the 50% favorably gap, but we say that it mitigated a previous candle right here, the wick of that candle on the monthly time frame. So in confluence with the Fibonacci level. So the target would be to take profit at this low right there. So you don't counter trade. You don't trying to go against the trend will actually cause you emotional damage. So it's better you stick with the trend. Alright. So now right here on the weekly time frame, immediately price trade into the Fibonacci level, we can actually see the structural shift it did here, and that is right here. We have the structural break right here. So marking out the structure, we have this high, we have this low. In this case, it started going bullish, right? So we have this high, we have this low, and we finally have a failed high, and that is the point when the market starts to shift. Okay, so we have that low right here. So let's go down to the daily time frame to looking for entries. And you know, one interesting thing I saw also on the weekly time frame was the price traded backwards to an area of supply right here. That's an order block resting right there. So one other thing about EURCHF is that it's always wiki, and spotting a clean order block is very hard and difficult. So going down to the daily time frame, we can actually see our structures right here on the daily time frame. We can actually see the point at which it shifted its direction right here. So we have our high, low, failed high occurred here, gave us a change of character, and you might consider this a break of structure, but to me I would say price just hunted liquidity right here. Now it traded higher, right, and respected this area of order block right here on the daily time frame and sold up from there, right? Now we put back again, and the structure we see right here when we trade into the weekly area of supply, in which is not clear and clean on this daily time frame. So the structures we have is high, low, and then we now have a high, and also we have a higher low again, then a failed high occurred right here. So I guess this is the area where I found the entry. So now we go down to 4 hour time frame. Now where I found my entry is actually at the 1 hour time frame, and it was at this point right here, and it's a confluence with KML right there. So I'll tell you the reason why I saw the entry right there to execute, but then didn't write the trade because price came back and hit break even. So the entry was that on the global time frame, most of you will see a demand zone right here. So that demand zone was violated, so it's a demand to supply flip. But then let's go down to 1 hour time frame where I had the entry. So that is it right here. So price traded higher all this while in liquidity, right? And the recent area where we have a structural break is resting right here, right? Resting right here. So the major structure is actually right here, and price broke that low right here. So now talking about this supply and demand flip, what I saw right here is we saw a stop hunt right here, right? So price hunted that high, taking the buy stop, purged it a lot before it finally possibly traded lower and then leave behind a supply zone right there. That is a KML level. So also the confluence was that we have inducements right here, because this is also smart money trap, because most traders we are looking at this for sales, but we still have imbalances below, and also the area in which buy stop was taken out is the area we're looking at to sell from. Okay, so price tapped it 2 times and then finally followed the buyers. So if you go down to the 4 to 5 minutes time frame, you actually see what I was talking about, that area is the area of order block that was violated, and that is it right here. So that leads to the cause of a change of character before the break was structured, right? So what is responsible to violate this order block? That is the supply right here, and opposing order block. Another block is validate if it takes out an opposing order block, and that's what we actually see happen right there. So price put backwards after taking inducement and small money trap. Then finally we get to see traded lower and down to the take profit, in which we are expected to see a new lower low. Next we have EURGBP, Rwanda. Alright, so we are now on the 45 minutes. Probably you're getting confused. You will actually get confused, and where you have the confusion is that you think the price shifted right here, and you see this has a break structure, and then you try to look for area of demand to buy from. That is not correct. You don't know your buyers, so don't try to tell me you try to scalp, you try to day trade. No, even if you have to do that, you must follow your higher time frame bias. So let's go to the week monthly time frame. We start our analysis off from that place, and now we zoom. Alright, so the interesting part right here, I will show you what's interesting right there soon. So let's go to FX here, and right here you can actually see that for sure the price has been bullish, right? So talking about structures, we external highs and lows. We have higher high, we have higher low, we have higher high, and then we have higher low. So even if you're using the Fibonacci, you actually get that correctly. So you have this low, we have this high. You can see it traded to 0.618 Fibonacci level. Alright, so now even if I have to go to 3 months time frame, you can actually predict, you can actually see what I'm about to tell you. Alright, so these are high, right? So now price traded lower, so it mitigated an area of order block right there, right here. So I'm taking this off. Now when it mitigated the area of order block, what did it do? Did it go higher to take out an external high to confirm that the market is still bullish? Well, it did not do that. So it just paused for a while. So what it did is that since it didn't go higher to take this high, this right here is now considered as a failed high. Alright, it didn't go higher to take the high, so it now traded lower. What did it do? It traded lower to grab liquidity, right? And still traded higher, but then still gave us another failed high. So it's a confirmation that EURGBP is trying to shift bearish, and if it possibly happens to shift bearish, we'll go into this low, or the first target will be that low, this low right here. So after seeing the 3 months, let's go down to the 1 month time frame. You actually see right here, price didn't go to take this high, so it's a confirmation that price wants to go bearish. But in this case, in this situation, it starts to range right here. But then something interesting was found on the weekly time frame, and that is a bearish structure. And here we are on EURGBP, and on the weekly time frame, remember the monthly time frame we have a failed high. Also the weekly time frame, we had a failed high, and after that failed high, we have a structural break that's about to happen right here. And I know most of you will be looking at this area of demand to buy from, but I will not confirm that to be valid, alright, because we didn't go to take this high. Alright, so now the market shifted because this market has already traded into a favorite gap, right? And finally, and now traded higher, failed to give us a high. So it traded lower, and what it traded into actually was that it traded into a tiny favorite gap. Actually, it went to balance the gap right there. So that was where I found an entry right there. So if we go down again to the daily time frame, let's keep looking at it, and you actually see right here what happened, that the market has been bearish and there's no bullish setup on EURGBP. Alright, so Now, trying to see where prices be drawn to, we can actually see that we have a structure printed right here. Also, we have a high, we have a low, and price traded higher, grab liquidity, trade into the imbalance, and after that we finally see that it traded lower to break this low. So looking for sales there, and then you trace backwards to where? So this other block. So we're trying to look for a confirmation entry. And now we go down to the 4-hour time frame, and we are now on the 4-hour time frame, and that is it right here. Very, very, very clean and clear. The first thing was that it's first traded into imbalance right here. So after trading into the imbalance, it gave a structural break right there, right? And after the structural break, we actually see we have an inducement right here before price finally traded lower. Now after that, price traded higher backwards. So also, if you use the Fibonacci to mark highs and lows right here, we actually see it traded into 0.618 pip level and close to extreme premium pricing. But then it traded into the daily time frame order block and rejected up from that place. So I was looking for confirmation entry, and that was what I saw on the 15 minutes time frame right here. So you go back to the Facebook page, you look for it right here. That is it right here, EURGBP. Immediately I entered the chart, I saw it is already there, so I quickly predicted the price should trade lower, and that is what we have right there after the analysis is done. So what do we see right here? Actually, price tapped and it traded lower, right? So this is the new high and this is the new low right there. So it didn't even come back to the Fibonacci level right here, so that is fine. But the interesting part I saw right here was that we had a tiny structure right here, and what it did right there is that it violated the supply. Now the reason why it violated that supply is that gave a structural break is because, and also it also had a smart money trap right here also. So the smart money trap was expected for Y before it was violated. Also violated this one. Now the reason for that is because this supply has liquidity pool right here. We have area of resistance, and also that same supply has imbalance above it. So the algorithm will be tempted to trade higher to balance price, favor the gap right there. So that's what we had right here, right? So it violated it, and let's see how 30 minutes looks like based on favor the gap. Alright, so this is here on the 30 minutes, and in 45 minutes it will look cleaner, I think so. Yeah, so this is it on the 45 minutes. So price traded into favor the gap, balancing the gap price right there after taking liquidity. So the entry was found on the 15 minutes time frame. After seeing that, I finally see a straight breaker structure. Now what am I seeing? What I'm seeing right here is price took liquidity to break structure. So remember, I say smart money concept is that the algorithm should take liquidity and be drawn to liquidity. So that's what we saw that happen right here. Price took liquidity and was drawn to liquidity, which is a structural break. Also took out this high, and what we have right here is a flip entry because we actually see a shift right here. And also those that have the mentorship knows what I talk about when it comes to slope, right? So we have a basic flip entry right there. So the area of supply I marked was resting right here. So what we have in here right now is a failed low right here. So you can actually see you have a shift market structure also. Now immediately we have that in the London session, price pulled back quickly and reject from there, and my take profit, the target was this relative low right here, but we have a set stop, and we'll actually see how price traded lower and smacked that take profit. So those that do intratrade and scalping, that is a profitable entry right there. Alright, so that is it for the breakdown analysis. And also I want to make a correction on the XY that I did previously. and I already did a analysis on DSY. You actually see the day right here. We saw this right here, July 5th, 3 o'clock p.m. my time, but the correct analysis right here was actually done on July 5th again, 2:43 p.m. So that was the analysis I did, and then I made the mistake, was kind of like confused. I was like, probably not, probably yeah, and then I decided to share this one on Facebook because I was seeing a structural break, but since price failed to break that high, then it's a sell. And then I have to backtest, like, you know, I shouldn't always be perfect with prediction. At least let me prove to you guys that at least for once I failed the prediction. Alright, so let's go to the chart and we correct the DSY analysis. So this is where I did it right here, and like I always say, we go to the monthly time frame, yeah, to analyze. So this is what I posted right here, and I said we have relative lows, price should be drawn to that low, and let me click this. So let's do the algorithm range, right? Yeah, so US DSY, sorry, why you zoom out. So most of you that could remember, I talked about Euro USD being bullish, looking from the what's it called? I don't need to delete all this. Looking from the higher time frame. Alright, so let's leave this chart. Let's go to capital.com. So capital.com was drawing a buy setup, which is not valid, so take that off. Alright, so you actually if you go there, you can actually see right here, TVC was where I had the first one. Alright, so yeah, the same TVC. So the one I shared on Facebook was capital.com. So we zoom, no, actually let's move to USDX. I'm actually trying to get the chart that has the whole stuff. So Paperstone, nope, sorry guys, I'm just looking for something. Alright, so since we don't have what we're looking for, but you know the dollar index is the inverse of the euro. So alright, so this is the dollar index, and the dollar index has been overall bearish actually, and just like I say, euro has been overall bullish on my previous videos and also on Facebook. So start to mark our structure, so external highs and lows. You know, this is the external high right here, and the external low is here. So that is the D range that we're dealing at, the range high and the range low that we're dealing with. So finally, the price put higher, right, and then traded lower. Now how's it traded lower? Something interesting happened right here. On DSY, we have it printed relative lows right here, and that's why I say the price will be drawn to. If you check the it's right here, relative low, price should be drawn to that. Previous month low, previous month high, previous 6 months high, previous 6 month low, which has liquidity. So price will be drawn here where we have liquidity pool. That was what I analyzed, and right here, the reason why I did that was that first of all, it draws liquidity was here. I got it in range of call right here where this candle opened, they go to take out previous month low. So it hunted previous month high, but didn't break this high of March. So that high is protected, and also that high did a hunt on previous month's high. Now the month of June opened but didn't go above this high, right? So it's saying that this high is protected, and now we are no more on the daily range. So price is now drawn to relative lows, and if you have to go down to lower time frame, we'll actually see what happened right there. So price trade lower, trade higher, and shifted, and we are now drawn to relative lows. So the dollar will keep crashing, and especially to trade into this level right here, the $89 price level, and that is in confluence with the aggressive range and this overall structure. So expecting the dollar index to trade clear the imbalance right here, unless you could want to buy from there. But for now, we are expecting it to trade lower because I can see we are having area of support right here, and it already took out area of resistance right here. So yeah, so that is it for this Y, and there was no bullish structure right there. So as a pair, I told you guys to buy on Facebook page, and that was BlackRock. I told you guys to buy it at where it was at the price of $690. So if you go back to the Facebook page and you actually go check the dates where I posted it, I gave you guys Tesla, and also I gave you guys BlackRock, right? So you can check the dates where I say you should buy BlackRock. You can actually see where it is, and now see where we are currently. So we go to the charts right now and we analyze it, and we actually see where it is right now at $710. The expectation is still it to go to the $973, and you actually see for the monthly time frame that the BlackRock shares, the stock, is overall bullish. So we actually see the structural shift right here: high, low, high, low, high, low. Internal structure, and we're expecting it to trade higher and break the high. So I don't know if any of you bought it, but then that's cool, that's fine. Price is in the direction right there. And yeah, talking about S&P 500, I've already explained S&P 500 to you guys, and you can see that I predicted it 4 months ago, and price followed the bias. And we are still going to see S&P 500 trade higher to this high, overall bullish. So, so then see you guys later. Take care of yourself. Bye.